Hey everybody, can you hear me? How's everybody doing? Post-lunch, got that coffee in, you feeling all right? We got some real heavyweights up here on this stage, so I'm really excited to moderate this panel. It's a true honor. These are some of the biggest investors in the Asian markets, and they know this topic extremely well. They also have the benefit of perspective. We have a lot of longtime crypto heads up here who have seen the highs and have certainly seen the lows. So consider this sort of a pulse check of where we're at now, right? We've been through the bear market, we've been through the winter, spring has sprung to an extent. And I'm just curious, let's start with maybe some of your less fortunate competitors, right? Bear market comes along following the 2017 bubble. 2018 was pretty bad. 2019, we've seen some growth emerge. For folks that didn't adapt, for funds that didn't adapt to those down times, what were they not doing that your firms did successfully to put you in a position to be here today? And I'll start with Chao, if you wanted to start, because you've been in this game a while. You've been in this game like 5 years, right? Which we were just saying in crypto terms is a century. These gray hairs, they come quickly here in crypto land. So from where you sit, and again, given the benefit of perspective, what did you do right? What did others do wrong in coping with the bear market?
Thank you, sir. Yeah, I'm an old guy in the crypto space. I dived into the crypto space in 2014. We've been investing in the crypto space ever since 2014 and 15. I wouldn't say that what we did right or wrong. Sometimes it's just your strategy may not fit the market. What we did, our story is that we tend to be a ecosystem investor, and we invest in like real value projects. We don't make quick money. I think that's just in a short, to put it in a shorter way, we invest in real value creating projects. Believe it or not, I think the crypto space or the blockchain, if you call it industry, or the Darwinism or the rule of the jungle also apply. If you're the fittest one, and then you will survive. But also you have to be careful with your bets. You don't place your bets at the wrong target. So for the start, I would like to share this point.
Yeah. Jason, I wanted to ask you about a quote. I was digging through the CoinDesk archives. We just heard about quick money. And I think this is sort of key for understanding, especially the Asian markets. When we talk about sort of token release schedule, right? Like that can be a contentious point of conversation. Back in March 2018, you were quoted as saying, China, you try and get the best deal, and when it's listed, you just dump it. If you don't dump it, someone else will dump it. So now that here we are in 2019, I wanted to know if that dynamic still applies or if we've emerged past that. What are the current conversations around token release schedule, dumping on these markets once investors get their cut?
Yeah. So last year, 2 years ago, during the ICO hype, I believe there's like a very standard framework for like vesting schedules. And I think what have happened is because last year there was still relatively high demand for like purchasing on the secondary market, especially listing on tier 1 exchange. This year things have changed, right? This year you got to be very, very strategic about your vesting schedule. You have to basically ask yourself, why am I giving, let's say, 10% of first month, 20% of second month? It needs to be logical. And I think the ones who have a very clear understanding of how much to invest, why we're investing this much, and very clearly understand where they're going to list, these projects will stand out, like from a price perspective. And then from the exchange perspective, it's actually they actually have more requirement of the listing. So back in the days, if you're going to list, you got to pay them, and that's pretty straightforward. Nowadays, they'll ask you for more details on like how you're going to do market making, how are you going to do community development. And obviously, we've done community development for last year. This is kind of like our focus. Even last year when I wrote an article about like, while everyone was investing in protocols, I wrote an article about like people should be investing into people, right? When the crypto community dies, what's left is really the users, right? And that's the kind of like investment area. And today, we're still very much, we have the same philosophy. We invest in projects that can bring traditional users into digital asset holders, right? And those ones turn out to be more attracted to exchanges because nowadays exchanges have money, they got money saved up in the bank from last year, but now they lack one thing, which is user. They lack KYC user, they lack users who are actively trading, they lack new users. So only projects that can bring in new users are the ones who are going to thrive.
So when you talk about community generation, though, like, so what's cutting edge in terms of finding a community of users? Where are you seeing success on that front?
Yeah, so for our investment strategy, we like to invest in what we call like late stage companies. Like they're more in the equity. They're actually more like after Series C. Some of them are even listed companies already, and then they'll branch out from a listed company to start like a token project. And the idea here is we want to convert some of their existing businesses that have clients, that have customers, and they've been doing this business for like many, many years, convert 1%, 2%, 3% over time into digital asset holders. And that is something that, I mean, from last year, I think this is something that a lot of funds kind of like, in terms of their investment strategy, that's what they lack. Because if you go into Silicon Valley, everyone invests in the FACT protocol, right? You look in Silicon Valley, everyone's investing into layer 2 infrastructure. And I mean, that's mostly true from an investment perspective. Like large exchanges like projects like that because they end up doing well in the secondary market. But from a blockchain ecosystem perspective, Vitalik mentioned last year in ECON in Toronto, which is 99% speculators, 1% user. How can we turn 1% user to 3%, 4%, 5%? And no one's doing that. Realistically, no one's doing that. And I think Asia presents itself to be a very attractive place to incubate projects like that because of kind of like the gray area and the regulations. And that's what we're doing.
Got it. And Vincent, I mean, the topic of this panel is how the downturn changed investors in the Asian market. And one thing specifically to talk about a concrete thing that your firm did that was interesting was sort of entered the crypto lending markets for the first time. I think in 2019. We reported in early 2019 that you had something like $15 million worth of crypto out in loans. I just wanted to get an update from you. That's a process innovation that your firm undertook. What are some of the other things that you're doing to make sure that your firm is healthy in downtimes and positioned to succeed in up?
Okay, this is Vincent, and in general, as FPG in this space for a long time, and we are very careful for our cash flow. And in 2017, and we already keep certain amount of cash for the next 2 or 3 years operating, right? And we also have a drawdown in last year. But as we have careful to spend our cash in the project investment, and also we're active to looking for the new opportunities, such as the lending you mentioned. And also this year we are expanding to invest in equity deals and invest in exchange business. And recently, from last year, last December, we also invested in mining chips. And recently, we are actually working on build a counter trading platform inside. And we already invested 3 teams outside, 3 trading teams outside, not inside. As people know, FPG, we have a large trading desk. We have 3 trading deal teams in-house, but we're still active to investing outside. But mostly from UK, but now we are looking at the traditional financial traders when you jump in space and when to do the exchange business or do the trading. And today I go through all the team outside, and I think more than half of them come from trading space, right? It's very different from last time I see most of the projects always change.
So you're saying that everyone out there is in the trading space from exchanges rather than particular startups that are offering products within the space.
Yes.
So that's where the market is evolving toward.
Yes.
So you mentioned the equity investments. I wanted to ask HashKey and also you, Jason. Are you seeing more of that over the course of this year? Talk to me about which type of investments you're making more often now and what that means about the market. So I can start with you, Jason.
Yeah, so actually we recently recruited someone from Trade Terminal. They used to run like a 300 million crypto fund in the US. And we recruited one of their co-founders over to start our secondary trading desk. So now we officially have our own trading team, and we're trading on like some of the top exchanges, mostly derivative. And we do notice that a few months ago, there wasn't even a market for like, let's say, options, right? Nowadays, there's a much larger market for options, but it's still relatively early, and we're definitely seeing a lot more financial product, like Vincent said. I think the difficulty for a lot of these new startups is, even though their product would be better than some of the top tier products we see in the space, it will be very, very difficult to convert those volume from top tier exchanges into their exchange. And that's kind of what we're seeing right now, and kind of like seeing, okay, how they can, if we make the investment, how we can convert that over, or what is going to be the trend like of converting users from, let's say, one of the top exchanges into their new exchange. And that's kind of interesting for us.
Got it. So some new things that I'm hearing from the bear market: lending business, secondary trading, things that hadn't been pursued. When it comes to your investments, what are you exploring? What's a new opportunity that you're delving into here in 2019?
Yeah. Since the start of our fund, HashKey, we've been operating like a traditional VC. So like half of our investments are equity projects. Like the rest of the half are token. But we see a swing from ICO fundraising to equity, and that trend has become more and more obvious. For one thing, it's because it's becoming more and more difficult for a startup or a project to raise funds through ICOs. Part of the reason is regulatory concerns. Part of the reason is because after the bubble, not many institutions or investors are still investing. For another point is that if you want to bring your project to the next level and build it as a business, you have to have this like a legal entity there for investors from a more broader area to invest in you. If many of the token funds are gone, and the investors in the market, most of them are either traditional VCs or corporate VCs, or crypto or blockchain investors like us who invested from a traditional perspective. I think there's the trend, and there's a need for equity fundraising.
So you have your exit in mind when you're making those equity investments. You would rather enter a path that at least promises at least traditionally has promised a path toward profit. So that's what you're saying. Does that mean that founders are in a relatively weaker position? Like when I see like an investment in tokens, does that mean that those founders have a stronger bargaining position? And when I see an investment in equity, it means that the investor got the upper hand there? Is that how I should deduce deals of this nature?
I don't think so, because if the project are really good, either they do a token fundraising or equity fundraising, they still have the same bargain power. Like during the peak of the bubble, many of the star projects, when you're like, however established you are in the investor community, you have to ask for the projects in a pleading way, please give us some allocation if they are really good. But when it comes to nowadays, when some really good projects, when we approach them, we still have to ask them and talk with them with sincerity and show them what we have invested, and what value we can bring to them, what kind of resources we can connect them with. You still have to be a good project. If you're a good project, you don't lose your bargain power.
Mm-hmm. So returning to the doldrums of the bear market, and I guess sometimes it's easy to forget how bad it was. I was curious if any of you have any stories of dealing with angry LPs, right? Like people who have invested in money are partners with what you're doing, and you're telling them, hey, we're getting slaughtered out here. The returns here are negative. We're in the red. How do you manage that relationship in a bear market? Does anyone have any tips there or experiences in dealing with that? Are your investors generally patient, or do they start knocking down the door when things start turning south? How has that worked out over the past 18 months, say? Vincent, if you want to start.
Here, frankly, and And our fund have more than 20 investors, mostly from ventures. So they have long time. So they are patient, right? But some of them, just as you mentioned, they're not patient. At the price dropped down, right? From around 20,000 to 40. Oh, it was 13. So for 30, investors can redemption, right? Right? I know not just us. I know most of fund structure like us have this kind of problems. And for us, and most of the money is our partner's own money in the fund. So we did not have that kind of liquidation problems. We can, if investor need the money, and we can do redemption. And for my side, and I understand when I the personal, I understand it kind of. They did not say I'm not good. They say, oh, this industry maybe have problems. Just to go back to the 2016, that time I have another big problems. As that time I share with you, and I'm not manage so much money. I manage around 20 million USD, a little bit less, 5 investors, and mostly for trading. But someday Bitfinex hacked, right? Lost 120,000 Bitcoins. All the investor redemption. In half months, I lost all the LP. From that time on, I know in this market is early stage. If you want to run a fund successfully, you should care for the liquidation, and also you need to put a lot of money yourself in the fund to guarantee if some bad thing happen, you can still survive. I show it right now, and we began our fund in last May 1st, and at the end of this May, we already make money right now. So right now, I think it's no problems, and we are surviving right now, and we have enough cash in the fund right now.
So times are relatively good right now, is what I'm hearing.
Yes.
So from that position, I want to ask each of you, technology-wise or state of the market-wise, where are you seeing opportunities? Where is your interest veering here? As we wrap up 2019. Jason, you mentioned the 99% speculator, 1% user dynamic, and sort of tilting that balance to something a little bit more healthy. Mm-hmm. Are there any particular technologies or companies even that you're particularly interested in right now? Without shilling your favorite project, please.
Yeah.
But speaking in broad strokes, what's captivating right now?
Yeah. So there's two different things, right? There's primary market and secondary market. Like in the primary market, we're still trying to look for companies that already have users. We're trying to convert that into digital asset holders. For secondary, like Vincent said, we're definitely seeing a lot more companies trying to enter the trading space. And because of regulation, we're definitely seeing a lot of interest in kind of derivative and options, and seeing kind of like the financial products that we see in the traditional market, and convert that to like digital asset, like lending, right? But we think it's still early, but that's definitely an opportunity that we're exploring, and especially the Southeast Asia right now. So new markets that haven't been, that didn't really catch the ICO wave, but they're slowly starting to kind of explore digital asset and trading. Those we're seeing a lot, especially license. We're seeing a lot of companies, a lot of Chinese entrepreneurs going to Vietnam, going to Indonesia, Malaysia, and claiming they have licenses, even Dubai. But different forms of licenses. Some of them say that they have money remittance license, some of them say they have OTC license, and that's a huge business, especially with kind of like recently with adjustment in RMB. We're definitely going to see a lot more interest in doing OTC business. Mm-hmm. So that's part of, I think that's where we're heading in this year and next year.
Yeah, Chao, I wanted to give you an opportunity to respond to that. What's interesting to you right now? What are you eyeing as the next great opportunity in the crypto space?
Yeah, technology-wise, we are looking at a project that that bring real technical breakthroughs. There are a lot of buzzwords, ranging from layer 0, layer 1, layer 2, layer 3, and now I saw recently some people are talking about the layer 4.
Whoa.
So it all depends on their definition. Be it layer 0, 1, 2, or 3, or 4, if we see real technical breakthroughs, we will invest and help the project to like survive, even you call it still the winter, to survive the winter.
So you're saying even at the protocol level, if there's a technical breakthrough, you're willing to invest at that
if we
base
see
layer.
real value. Business-wise, we are focusing more and more on user friendliness and mass adoption. Like recently, we've been looking at wallets, keyless wallets, through which you don't have to like write down your private key and keep it in a safe, at a safe place. And also on-ramps, and so help you have an easier way, easier and compliant way for you to buy crypto or sell crypto.
Yeah, that's that user question, right? The user acquisition question. I guess no panel is complete without a discussion of regulations and how that affects the way you make business decisions. I mean, Jason, you mentioned it, right? Historically, Asia has operated sort of as a gray market, whether it's with ICOs or other products. Maybe it's becoming a little bit more clear and a little bit more difficult to navigate. I just wanted your take on, living with the threat of regulation sort of always over your shoulder. What's that been like, and how have you adapted when it comes to making some of those decisions?
Yeah, so especially in Asia, I think even today, a lot of the business require like working with the government or knowing people in the government. And this is not only just for crypto, this is true for like real estate, for any large businesses. License is mandatory, but what we're seeing is that they're more open to issuing licenses. The question is how long or how sustainable these businesses can last, right? Let's say if we're moving like, if the volume is like 100 mil USD, then maybe that's okay. But we're talking about in the billions. Will that kind of catch eyes of other people, right? And that's something that we notice even in smaller markets. So companies will claim that they have license to moving certain fiats, and then we notice they can actually do it. But we also notice they're not willing to scale because they're afraid that if they scale to a certain threshold, then they could get in trouble. And that's what we're seeing right now. So people are starting to be more open to having certain licenses, but we're not seeing that level that we want to see. And we think it's just the nature of doing business in Asia.
Yeah.
Yeah.
And Vincent, I mean, from your perspective in mainland China, how does that work with the way that you're able to make investments? How are you viewing the regulatory landscape here at the end of 2019 when you're deciding when and where to invest?
And for us, I didn't like to talk about China, but we are open to investing in some regulation project or the companies. We also invest in regulation in the US exchanges. And how I think regulation is two ways. One way is called control the fiat, another way is for security, right? So just like right now, if you see the coins market right now, if you want to ask me what kind of coins should buy, right now maybe old Bitcoin and they kind of buy back in a bond model, exchange token, platform token, right? But maybe this is regulated, right? But this is just instead, this is crypto. If you want to make money, you should jump in this space and invest in the kind of tokens. But for us, right now we are have eyes on the kind of regulate fiat payment exchange business, and this is I think this is a new opportunities in the next stage. Yes, regulation, and we just follow up. Recently, also the Swiss just issued 2 licenses to the pure blockchain bank, right? I'm not sure when the Singapore and Hong Kong will open a kind of gate to the entrepreneurs. But we are very interesting, and we also follow up the kind of trends.
Yeah. So in these last 3-4 minutes, I want to assume that the crypto market is indeed cyclical, right? Where we have these run-ups, bubble pops, dips to some level. We see it over a 2-3 year period. It happens again and again. This was not the first bear market, obviously. Is there anything from this particular bear market that you learned in terms of a lesson for what you will do better next time should a bear market emerge? And if so, what is that? And Chao, I'll start with you. I will put you on the spot. What did you learn this time around that will better position you for the next bear market?
In response to the earlier question, actually we don't have like angry LPs because most of the money are from ourselves, from the mothership company. So part of the reason why we survive is that we've been very careful and have a very high standard for selecting our portfolio companies. So
can I stop you right there? Can you explain that parent? You're talking about a storied Chinese car maker who helped launch your current venture. Can you just explain that for folks in the room who may not be aware?
Actually, we are a strategic alliance with Wenxiang Blockchain Labs in Shanghai. But the two companies are legally independent from each other.
Okay. All right, you can continue with your lessons learned now. Sorry.
Okay, so the lessons is that be careful with your investments and have a higher standard for selecting your projects. Be a value investor. You don't want to make quick money. It comes easy and it goes easy.
Yeah.
Yeah.
Jason, what did you learn this time around? You were raising at the peak of the madness in late 2017. You launched as your own fund right as the bubble was bursting. What's your lesson, and does that particular timing offer any particular takeaways?
Yeah. So I think one of the things is we should always try to obviously hedge against the market, but I think you should always try to have different verticals of kind of the businesses in crypto. So initially, we were just purely focusing on primary market. Now we have secondary, and we're actually launching a wallet business in 2 months. So it's our own wallet called Sora terminal. So for people who never use crypto, they can just go on and make EOS and Ethereum wallets. So basically having new verticals in your business. And one thing I think is really important is because a lot of people who get into the space, especially the ones that we try to invest and we try to convert, it's the first time, right? A lot of times it's the first time. So I think education is really important. You got to educate not only your investors, you got to educate your CEOs, your portfolio company CEOs, so that they know how to educate their staff, so that they know how to educate their community. And so there's going to be more expectation out there. And then in general, I think one of the worst part about the bear market is actually not the price. I think because if the price goes to 3,000, it's going to come back, and we're back, right? So I think the worst part is in the process of going down to 3K, we lost a lot of talent in our industry. Because people running away from with their money in the fundraise, people getting scammed, and that's really hard to convert back. It's really hard to convert someone who's been scammed in this industry, who's been jaded by the industry, to convince to kind of work with us again. And that's just unfortunate. So I think moving forward, I think having better education for us. I mean, these conferences are helpful, right? Because they educate people on what to expect in the next coming months. And if we do a better job in this, I think we can at least try to maintain most of the good talents in our industry.
Got it. And Vincent, we're wrapping up here, but educate this room of investors. For the next bear market, what's something you learned this time around that will obviously make a better informed community of crypto investors?
Okay, I'm also asked this kind of question asked to my team members, and for the biggest lesson I learned from the bear market is this question I think is always keep half your money liquidating coins. But for us, for our team, myself and the FG Capital, I think the most lessons is we should buy we need always invest in buy bitcoins in the bear market. I think this is the best learn. For us, we are we are do well in the bear market for the cash management. I think do good. And we have, so this is the reason why we react very quickly and go back. But for us, the problem, we did not have that kind of big position on a good asset. Bitcoin and some companies with maybe that time with some discount equity opportunities for big companies. This is maybe the lesson I learned. If the market, I like bear market, right? If the bear market come back again, I think we should buy more. Yeah, this is the lesson I learned.
Okay, so buy into the bear market is the parting word from this panel. That's going to be the last of it. We're going to leave it there. Join me in thanking our great panelists, and I hope you enjoy the rest of your day here. Thanks.